All right, let's get right into it. While we've all been busy with our daily lives, there's been this quiet revolution brewing in the background. It's something that could completely change how we think about and use money. And the fight for what that future looks like, it's really just getting started. I want you to think about this for a second. What if the money that you think is yours, what if it could be controlled or even just switched off by some central authority? It sounds a little bit like science fiction, right? But believe it or not, that idea is at the absolute heart of the conversation we're about to have. Because you see, this isn't just some abstract theory anymore. Pretty much every major government and central bank on the planet is developing a brand new type of digital currency. So that's what we're going to do in this explainer. We're going to break down exactly what this is, why it's all happening right now, and what it might actually mean for you and your wallet. Okay, so first things first. What in the world are we even talking about here? Let's start with the absolute fundamentals. So the term you're going to hear thrown around all the time is CBDC. It stands for Central Bank Digital Currency. And in the simplest possible terms, it's just a digital version of a country's money, like the dollar or the euro. But the key difference is it's created and sent out directly from the central bank itself. Here's a really simple way to wrap your head around it. That cash that's sitting in your wallet right now, that's a direct claim on the central bank. It's a physical piece of paper that represents value. Well, a CBDC is basically the digital version of that piece of paper. It's a direct digital claim on the central bank, which kind of bypasses the commercial banks we're all used to. But this is where it gets really, really interesting, because a CBDC isn't just a digital dollar. There's a fundamental difference. With the physical cash you have, you get total privacy. It's anonymous, and you have complete control over it. With a CBDC, though, the system is designed so that the central bank can see and regulate every single transaction. And that is a huge change from how cash has worked for centuries. And look, this whole idea of control isn't some conspiracy theory. It's right at the center of the debate. I mean, you have Christine Lagarde, the head of the European Central Bank, on camera saying that a digital euro, well, it will be used for control. When you hear statements like that from the people in charge, you start to understand why this conversation is so focused on that balance between government power and personal freedom. So, like I said, this isn't just happening in one or two places. This is a truly global movement. Let's take a look at just how big these experiments have become. So, how widespread is this push? Well, the number is pretty staggering. 94%. Yep, 94% of central banks across the entire globe are either exploring, piloting, or are already building a CBDC. And we are talking about every major economic power here. The US, China, India, the European Union, you name it. This is a massive, coordinated, worldwide effort. And yet, here's the really weird part. Despite this huge top-down push from all these powerful institutions, when you look at it from the bottom up, people just aren't interested. Where these have actually been rolled out, nobody is using them. I mean, this chart tells the whole story. Look at Nigeria. Even after the government there cracked down on the use of physical cash to try and force people to adopt it, their e-naira has only reached about 6% of the population. And in the Bahamas, which was one of the very first to launch a CBDC, their sand dollar has less than 1% adoption. The public demand just isn't there. So that brings us to our first big knowledge gap. The official line is that these things will make payments more efficient and help people who don't have bank accounts. But if the very people they're supposedly designed to help are showing basically zero interest, why are governments and central banks spending so much time and money pushing this forward? It's a huge question. And to start to answer that question, we have to look at the bigger power struggle that's going on here. This isn't just about physical cash versus digital cash. It's about who is going to control the financial system of the future. You see, the biggest competitor to a government CBDC isn't another government's currency. No, it's a corporate-run digital currency. You've probably heard of them. They're called stablecoins. These are basically digital tokens that are pegged to a currency like the dollar, but they're issued by a private company. Okay, here's another analogy to make this super clear. Think of a CBDC like a school-issued lunch card. The school sets all the rules, they decide what you can buy with it, and they can turn it off whenever they want. It's all about policy. A stablecoin, on the other hand, is more like a Starbucks gift card. A private company runs it, and their number one goal is just to get more people using it so they can make more profit. They're two totally different models of control. Now, you might be thinking, okay, so we have to choose between government control and corporate control. But here's a twist. The source material we're looking at suggests that the rise of these corporate stablecoins might actually be the very thing that speeds up the arrival of government CBDCs. Let me walk you through one way that could happen. Okay, so here's how the dominoes could fall. First, imagine there's some kind of major financial crisis. Then, people start to get really nervous about what's actually backing these corporate stablecoins, which a lot of the time is just government debt. That fear leads to a panic, a popular stablecoin collapses, and suddenly there's financial chaos. And then, finally, the government steps in and says, "See, we told you corporate money was risky, but don't worry, we have our safe, reliable, government-backed CBDC ready to go." The crisis itself becomes the perfect excuse. So, where does that leave us? Let's bring all this together and talk about what this high-level battle for control really means for you, your money, and your freedom. At the end of the day, what this really is a tug of war over what money will even be in the future. Are we moving toward a system run by governments to achieve their policy goals, or are we heading toward a system run by corporations for profit? And the most important question is, where do you, the individual, fit into either of those pictures? So, how are people responding? Well, the source material we're looking at points to a few different forms of pushback from people who are pretty skeptical. Those who oppose CBDCs are advocating for using physical cash more, kind of a use it or lose it approach. They're also getting involved politically, voting and submitting feedback when central banks ask for public comment. And finally, they point to those low adoption numbers we saw as a kind of quiet, passive resistance. And this whole thing just opens up a much, much deeper question. Another big knowledge gap for us to think about. As our entire world goes digital, is it even possible for real financial privacy and individual freedom to survive? Or is giving up a certain amount of control and privacy just the price we have to pay for convenience? And that's really what it all boils down to. Will the future of money be designed to empower you with more choices and easier access? Or will it be designed to control you with more surveillance and new restrictions? The people building it promise one thing, but its critics fear the other. And as this technology gets rolled out, that's the choice that's being made right now.